Lululemon is down by 10% as a matter of fact. So in this video today, folks, we're going to investigate this company by the numbers, figure out what they're doing right, what they're doing wrong, and finally figure out the intrinsic value of this company so you have a better idea what you should be paying for this company today if you're planning to invest, and whether it's potentially a good deal. So I've loaded this up here first in Yahoo Finance just to show you guys that their earnings, the last 4 quarters, 2022, they have crushed it. They've beat their earnings the last 4 quarters. However, there was talking about warnings of falling fourth quarter margins. There's a lot of negative news surrounding how the holiday season wasn't too kind to a company like this and Macy's as well. And it's evident. Inflation's high. There's a lot of these other factors that currently exist that are stopping consumers from spending. So in that regard, companies like this will get affected pretty hard. What I'm going to do, folks, is load this up in the stock spec software here. And here in the financial valuations, they are getting a score of 9 out of 10. That's a phenomenal score. The only thing they're getting wrong here is their price to earnings ratio on a 5-year average being 48.28. We like to find companies, folks, that have a price to earnings ratio on average 22.5 and below. That is much more of a fairer multiple, a lower multiple, because anything above that, essentially you're paying a premium for those earnings. Now, diverting your attention to the company metrics category, which is right beside it, their price earnings ratio on the trailing 12 months is currently 32.08. It's a lot lower than their 5-year average, still not around that 22.5 range which we're looking for, but better nonetheless. Now, let's go through these numbers here to figure out what they're doing right, and it's a lot. Their current ratio is currently sitting at 1.99, pretty much a 2.0 current ratio, so they essentially have a lot of assets on hand to cover those liabilities, which we like to see. Their return on equity average is 28, where you like to find companies that have a return on equity of 15% or higher, which is phenomenal for Lululemon because it's currently at 28 on average, and in the company metrics category, it's 41 for the trailing 12 months, a major increase. So that's phenomenal. Their EPS, their earnings per share, has been growing over the last 5 years. On average, you can see it here, 4.50, and now it's grown to 9.12 for their trailing 12 months. A total increase of 652%, which is great. They have a low debt to equity ratio, meaning they are leveraging capital through equity within the business and not through debt. Jumping over to the right hand side, Greene across the board here, they are buying back shares by 0.40%. Very minimal share decrease. Buying back shares is great to see. Their net income is up, their free cash flow is up, their revenue growth is up, and their return on invested capital sits at a whopping 33.45%. where the trailing 12 months sits at 40.25%. These are astronomically high numbers. So when I see a company like this going down, now you understand why I get excited, because a 10% decrease in a company that has such strong fundamentals, to me, I look at that as a sale, and you should too. So if you're currently invested in this company, understand that this company has a very strong balance sheet. Here's the thing, folks. What is this company worth? What we're going to do, folks, is plug some numbers into the price analysis section here. There's a lot of historic numbers here that I have on the right-hand side that I'm going to use and do a 10-year analysis. And then I'm going to find out what we should be paying for this company today. So stand by while I fill out these lovely boxes. And folks, if you're enjoying the video so far, hit that like button and subscribe button to get your hands on this software here. Follow the links in the description box below. There's a 7-day free trial for the software. Try it out, cancel anytime you like. Now, here's the thing. I'm going to go over to the price analysis section. I just click the calculate button here. But just to give you guys an idea of what I've done, if you're new to the channel, I like to try to stay as conservative as possible here. So with the revenue growth numbers, I looked at what they've done over the last 1, 5, and 10 year, and I really discounted it down. Now, granted, here's the thing though with Lululemon. They say their profit margins might be getting hit. What I want to do, folks, is reduce it even further just to give it a little bit of a haircut so I could be as conservative as possible. I like using these conservative numbers because that gives me the most margin of safety. That way, if the price comes out in my favor and they do better than my numbers, I'm winning at the end of the day. I only want to put myself in a winning scenario. Now, free cash flow margin, same thing. Price to free cash flow and PE ratio, I've used some conservative numbers, 14, 16, and 18, staying below that 20% threshold. And the desired return, 13% return. Guys, take a look at that. The average calculation comes out to be $318.90 with these relatively conservative revenue growth numbers. Now, just the other day, if we just go back, just to Yahoo Finance, keep that number in mind, $318. The stock price on Friday, literally $329. $329. And now, on average, it's calculated to be $318. This went from being an overvalued company now just slightly undervalued in a matter of a day. So when you see these price decreases, how you have to ask yourself, how can you capitalize on these companies like this? Now, granted, one thing to do keep in mind, folks, is as we approach this recession, as people start spending less money, they most likely will not be spending as much money at Lululemon. However, that means they're going to probably not bring in as much revenue, which I factored in. Their profit margins are not going to be as much, which I also factored in. But them being a financially strong company, they'll be able to weather that storm. So what do I think might potentially happen? I think this stock price might be coming down a lot further. I feel like there might be a little bit of a bounce. I wouldn't be surprised because 10% drop is a fairly huge drop to just accumulate. So it might be slightly oversold if we're really talking about it from a trading perspective. But I think if this stock price comes down even more, you're getting a larger margin of safety, especially if by chance it manages to reach this 245 average calculation on the conservative side. However, south of 300, looking pretty decent for this company. My thoughts on Lululemon, I think it's pretty much almost it's so tempting right now. Maybe wait until the stock price drops a little bit more because I have a funny feeling it will. Anyways, folks, that's the video. I will stop rambling. I hope to see you in the next one. Follow the channel as well as take a look at the stock analysis videos playlist here that I'll probably just leave up here right beside my big head for more stock analysis videos, more content on the way. I do minimum 3 videos a week, so I will see you in the next one.